of dollars in extra FDIC fees, so that the FDIC can replenish the government's deposit insurance fund. It follows, of course, the collapse of Silicon Valley Bank and Signature Bank, with other regionals on the brink. Yesterday, PacWest began this day by telling us that deposits were down 9.5%, and as a result, we saw the stock fall 20%. Joining me right now is ERShares CEO Joel Schulman. Joel, your reaction?
Well, I mean, we're seeing a domino effect here among regional banks, and we're seeing, of course, the large banks, taking the brunt of it. Now, they're both winning and losing. This is a market of haves and have-nots. And so if you're a large bank, money center bank, you're getting a lot of the flow of the customers who are panicking, bailing out, taking their deposits out of the small regional banks, going to the big banks. The small banks are hemorrhaging. We're seeing that domino effect play out in the marketplace. It's not over. And the big banks are acquiring the assets of the smaller banks at pennies on the dollar. And so, probably not surprisingly, they're now paying the higher piece for the insurance because they're the benefactors of this banking consolidation. And that's really what we're seeing, consolidation in banking.
Well, look, Federal Reserve Governor Christopher Waller raising the alarm for the need for banks to put focus on climate change risk. OK, he says the weather events do not particularly affect the national economy. Meanwhile, a New York Fed study finds deposit withdrawals from U.S. banks after the collapse of SVB were concentrated in around 30 super regional institutions. The $50 billion to $250 billion range, Joel, do you worry that small business is going to see a negative impact from all of this? After all, the regionals are basically lending to 90% of small business.
Yeah, small business is going to be hurt. And in fact, Fed Waller, at first pass, it doesn't seem like we should be worried about climate change and the impact on banks. But if you talk to a real estate developer in Florida, they'll tell you that's a big problem because they can't get insurance. And if they don't get insurance and they've got loans outstanding to banks that require insurance in order to maintain that loan, and the bank financing comes due, they're in trouble. So what does a real estate developer in Florida do if they have a big building on a beachfront property? They can't get the bank refinancing. They can't get insurance. What are they going to do? So actually, at first pass, the climate change doesn't seem to be like a big problem, but it really is becoming a problem in certain states, particularly Florida. And to your point about what's the impact of the small regional banks, you're right. That is going to hit smaller companies, particularly the entrepreneurial companies, harder. And so, again, we're seeing a market of have and have-nots. We've seen a twist in the yield curve with the short-term rates going up, long-term rates are going down. If you're a larger company and you get financing from a big bank, you're a winner because your rates went down. If you're a smaller company and you're getting loans from a smaller bank, your refinancing risk is very high and you're a loser. So this is a market of winners and losers. Big companies are winning, big banks are winning, smaller companies are losing, smaller banks are losing.
Yeah, I'm with Francis this morning. Jump in here, Francis.
Yes, good morning. So what's the next shoe to drop? Is it the commercial real estate? Is it the debt ceiling? Is it student loan payments maybe coming back online? What do you think? And what probability do you think that we actually have a sizable credit situation?
Well, I think to your question about next shoe to drop, it's going to be the regional banking, continued domino effect. And in fact, when Janet Yellen said we're not going to bail out any more small banks, they did a one-time offering at SVB cost, I think, FDIC about $20 billion that they're now paying higher insurance rates. But we're going to continue to see smaller regional banks lose deposits, and as a result, they've got short-term liabilities, they've got long-term assets. Ironically, SVB went belly up, not because they had bad loans, but because they had loans. They had assets invested in supposedly risk-free treasuries that were long-term and the decline in value. So it wasn't from bad loans. It was from a mismatch between assets and liabilities. I think the regional banking crisis is going to continue, and that's going to have a ripple effect for again, smaller companies. But ironically, last week we saw larger entrepreneurial companies or larger, more speculative companies become big winners. We were up 4% last week by shifting assets to larger growth companies that are more speculative. Ironically, it was the larger speculative companies that won last week. It was the smaller, companies with refinancing risk that lost.
Yeah, well, TD Cowen writes, commercial real estate credit concerns will become the next focus for the banks as they seek to escape the crisis. because you've got the commercial real estate exposure. So you're also worried there.
Yeah.
Joel, it's good to see you. Thanks very much for being here this morning.
Right.
Joel Schulman joining us.
Thank you.
Quick break, and then JP Morgan CEO Jamie Dimon turns to the regulators to help end the banking crisis. Former Dallas Federal Reserve President Robert Kaplan is here.